Tencent plummeted after Prosus announced plans to sell more of its $134 billion stake in the Chinese internet giant, that all to finance a buyback program. Now, that move reverses a pledge to hold on to the full shareholding. Bloomberg's Tom Mackenzie joins us now for more. So I think they pledged something like 3 years. They wouldn't touch the stake. So how bad is this for Tencent?
Yeah, a bit of a U-turn from Prosus. And there's a bit of context. I'll just briefly touch on it. So Prosus is the e-commerce giant. It was spun off from Naspers, and it has this idiosyncratic story, which is it has this massive stake in Tencent. It's the biggest holder of Tencent shares, 134 billion. Yes, they said they weren't going to sell it down. Now they've reversed that because they say they want to fund share buybacks of their own stock, which is valued, if you strip out the Tencent holding, at essentially negative, because 134 billion, the valuation, that is of the valuation of their Tencent holding, their total valuation, their assets, far less than that. So they want to boost the valuation of their own assets with these share buybacks. So that's the idiosyncratic story around this Dutch e-commerce company, which happens to have this massive stake in Tencent from its legacy to Naspers. There's the bigger story, though, about what signal it sends around Chinese technology, of course, at a time, you've been discussing this, as some within the markets are turning more positive because you've started to see the foot on the throttle, or at least the neck of Chinese tech being slowly taken off by Chinese officials, the likes of JP Morgan increasing their exposure through their China fund to Chinese technology. The signal that this sends, potentially, there's a little bit more uncertainty about where this goes in terms of regulatory clampdown, because Naspers and Prosus have great insight, of course, into what happens within the tech space of China. So some will take this as a negative.